Hello, everyone. Welcome back to the racialinvestor.com. What is this? This is our weekend show. Oh, actually, I can't see the. Maybe I have to hit the go live thing. Oh, so did we never put a tweet out on Facebook or whatever? Are you supposed to say that? I'm not sure if that's the right thing to say. I don't know. All right, Chris, you can type an answer if you don't want to talk. That's fine. Oh, okay. Well, anyway, hello everyone. Oh yeah, what is this? This is the Broiler Chicken Show. Terribly unprofessional. Yeah, well, what can you do? We do like to have a lot of fun on the site, though. I will say that. Especially in if anything, just a simple fact. We're just here week in, week out, month in, month out, year in, year out. Hopefully that's just a testament to it's just in our blood. Some people just have this trading bug. You catch it relatively young in your career and you just can't get rid of it. So what was Brian doing on the weekend? Brian was actually having fun running a paper trading day trading program on Ethereum through the weekends. I do it in the futures markets, just sort of demonstration for the good site members. But also too, it's a really good. I'm finding that after I've been running this silly website now for a good 5-10 years. I'm rustier than hell when it comes to trading. Anyway, having some fun flipping Ethereum burgers. What was really interesting about this is check this out. I mean, this was it was so cliche this morning. So this was your New York kill zone, what we like to call the North American opening, and they just dumped it and just broke a ton of hearts here through this. So typical. But what I found interesting was Foggenbaum. First off, for people in our education program later on, level oneers, they'll be learning about things like the parking garage. So I would expect price to dump into there. Fun little tools that I've learned through this whole sickness market chaos theory. Really interesting that 2.618. It's always a question of how and where you sort of draw these. Anyway, so I had a fun little trade where I just bought basically that 2.618 beautiful foggy boggy level there. And the market actually put in a fantastic bottom through that. Couldn't believe it. And actually, this is just so cliche because it's everything that we teach. So I'm so, this is what I want to do, and this is what I want to show all of you guys. And actually, what was interesting was that was a short that I covered. It's too bad TradingView. I don't even know that TradingView shows the numbers here or not. Anyway, I'm just blabbing away here. But we had this up on the screen, and Chris and I were talking about it earlier. It was super cool how this is so cliche, and that like I said, this is like a New York liquidity event zone, and they dumped it into a level, and I just stepped up and said, you know what, I got to pull the trigger on that level. Let's see what happens. We were talking a little bit later how even more impressive reload zone off of a foggy boggy level. Oh my goodness, what a trade level. And then also too, we were talking about how harmonically you often see this, right? They'll dump the market, everybody's thinking bear, they're all emotional, and then they go and paint an M here, and all the new people that are trading, they're all like roaring bearish. And I even looked at this and went, uh-oh, here we go. And then all of a sudden, out of nowhere, the goddamn market stops right off of that level and then turns right back up. It's quite remarkable. So anyway, first one off at the 50% rule, which I think is a good idea. Then the second one got a little bit greedy on that. Check this out. This is when I saw this, I couldn't believe it. Question is, how the heck am I going to draw this? I think what I did was I went off of this range. Low up there, that high there, and chaos. Yeah, it was something along those lines. And especially with this M here, How exactly you draw this fog and bomb off of this, I don't know. But I did like this kind of idea that I'm going to use the most recent sort of push lower. I don't know whether, I'm sure there's a specific name to it. But, I think maybe it's the FU wave. I'm actually surprised they didn't take out that low. But anyway, 2.618, then 50% roll. I always like the idea. It's a good idea to take some profits at the 50% roll. And then I threw the other order up at the 4.669. And what was fascinating is you can see the market sort of started to waffle. So if anything, it's a good idea. I hopped off on that 50% tag. Yeah, because you never know. I mean, this thing could have flaked out and came all the way back down. But what was really interesting about this is if you did your little foggy buggies going the other way, actually did tag that 2.618. And quite often what will end up happening, I've noticed with these fog and bombs, is it's weird. It's sort of like it plays ping pong back and forth. So you can see how we kind of went there down to here, but maybe like that. So down to there. Interesting how I just missed this one. Probably because it was working off a fog and bomb off of there. I don't know. That's a tough one. Yeah, that one there. Anyway, me just having fun on a Sunday, chit chatting. By the way, level 1 program, they're still in class, so that's why I'm just blibber blabbing away here. And what the hell, we got well, I guess more a baker's dozen, so we're not doing too badly over there on YouTube. It's kind of funny how people ask other people, like, and TRIers are like, that Beamish guy, CRI investor on Twitter. Why my name handles that, I have no idea. But actually, it's supposed to be a Canadian rational investor. Anyway. Okay, back to our story. So quite often we'll hit that foggy buggy. And then you notice in this particular case, I think what happened was they hit that, and then we went right back up. So it's almost like, and actually, I'll probably go this way. It's almost like, no, I'm done. And then I suppose you could argue at this point, right, that there's a war going on, because now with this pullback here against these lows, you can now start doing fog and bombs heading up. So quite often I've found, it's just personal observation, if you blow through one fog and bomb, odds are we're actually heading like straight up to this next one. So I guess nice cluster confluence of fog and bombs up in this area. And then if we just do, our good old, actually there's the 50% roll. But if we change this to our reload zone, what do you think the odds are? This is like 78.6 to 88.6 area. So probably pretty good. The crypto reload zone. I think that's what I'll call it from now on. So boom. Yep, there you go. So anytime you're up in 78.6 to 88.6 and you got like two fog and bombs staring you in the face, odds are we're probably going to top out. And really, I'll tell you, man, it's so funny. You see that image right there? I mean, regardless, I got to say, I'm pretty darn proud. This is why I'm talking about this, because I'm pretty darn proud. I forced myself to step in the face of that blitz, and I took profits appropriately. First one, of course, like I said, always a good idea to take profits at the 50% roll. If nothing more, it just keeps you honest. Like there's some guy on Twitter right now, and people are like, Brian, you're wasting your breath. Why are you even bothering? But I thought it was really important to point out that your job as a trader, and anybody who watches this channel, all 20 of us, we know what our job is as a trader. I don't know. Chris, do you know what your job is as a trader? I mean, I suppose it's to make sure these damn videos start and end on time. No, that's not as a trader. What's your job? Hey, there you go. So, oh, come on, you got to say it. Look at all these 20, 30 people. They got to know who the hell's driving the bus here. I want to hear your
Okay, I've
voice.
unmuted my mic. So our number one job as traders, especially here at TRI, is to be able to come back tomorrow to play the game again.
That's right. Damn straight. Too many people, you find out. And only after the fact, right? When somebody's completely wiped out, there's nothing they can do at that point. It's like, you stupid fuck. You know? So, I mean, do you be empathetic to people? Or do you go, you stupid asshole? I told you not to take that kind of risk. You dumb fuck. And that's usually, and this is the worst part about it is on the way up, they all go, oh, yeah, still have a double. You're so stupid. Oh, God, it drives you crazy. I mean, do you have to continually sell halves on doubles? I think you do just because it's good money management. But nothing says you don't. I mean, just get your original risk capital back in your hands, send it back to mom. So then that way, when the wheels fall off of the bus on the story, you can at least go back and get a place at mom's basement and start all over again. If you're dead broke, mom might not even allow you back in her basement. I'll tell you, I had a challenging childhood. And when my wife met my mother, she couldn't believe how cold my mother was. She honestly couldn't believe it. And half of the reason why I was with JoJo is because she was so incredibly loving. Like I sort of overcompensated, I guess. But she couldn't believe how cold my mother was and it's funny because I went over to Holland and I met some of our Dutch site members, and they're like, "Oh, you're Dutch? Oh, well, of course your mom's a bitch." Well, maybe that's not the right thing to say. Of course, your mom is challenged emotionally. Maybe that's the way I should say it. Yeah, sorry, that was terribly politically incorrect of me to say. So, but anyway, I don't know quite sure where that came from, but I was talking about something important. All right, so bottom line here is your job is to make sure you come back, play a game again tomorrow. So, in this particular case, this is a really good example where, let's say you had an absolutely killer level and you're so proud of yourself. Well, just at least take some profits, and this is why I always like the idea of trading like multiple cars is at least it gives you some flexibility. So most times actually when I'm trading the futures contracts, and I really like it with the micros now, you can trade like 3 contracts, 5 contracts, 7 contracts. And actually there's a really famous trader that I think we might have his video in the library. I think his name is Schwartz, if I'm not mistaken. And he'd always he did a public video, but I remember when he used to talk to us at Top Step, same sort of thing, and it's probably a pretty typical sort of mature statement. But he would talk about sending his troops into the battlefield, and he would maybe commit like 1 or 2 to begin with, right? And then, as the trade's working, add more, add more. I mean, that's always the smart way to do it. I don't seem to have it in here. It's too bad. But I just want to have it in here, but oh well. Anyway, point being that in this particular case, you let them have 1, move your stop to scratch on the remaining, and then this is sort of like a home run trade. I just dangled it out there up against the old highs. Markets, they usually say range about 70-80% of the time. So odds are probably it's going to stall out. Now, having said that, if I had 3 cars on, I think I probably would have let another one go here and then just used either 3 high-low method or just had my stop at scratch, which probably would have just been hit here on this event way over here, and I would have walked away on the 3rd one at scratch. That is interesting what they're doing here. It's almost like as we were getting ready for the video, I was all proud of myself for this trade, and then we noticed, hey, it looks like they're doing exactly the same damn thing. The only problem with this, though, is this kind of smells, right? You can't go to the well too many times in this game. So you would like to see this turn up. I mean, if you're going to take a shot, that's an interesting level to take a shot. In this case, I guess it's the 4669 level that this thing's trying to bottom off of. You probably kind of like 50% roll. My hunch is, had you taken this trade off of these levels, and of course, look at this beautiful reload zone setup down here. But, just like this one, probably the smart thing to do is pay yourself a little bit. Just make sure you can keep the rent on, or the electricity on, and all that kind of talk, right? So letting one go on this rally here probably would have been the judicious thing. And I suppose had you either bought an interesting look at this, what a coincidence. I often see this happen too. Notice 4669 and this fractal. The fractal buy signal actually basically is that 4669 level. Right? There's the 3-bar fractal signal. And FYI, I suppose the level oneers, I suppose if you're going to be watching this later on, you'll be doing this. Actually, I think it might be this week, or maybe it's next week, one of the two. So this will be pertinent for what you're doing in a week or two. You can always tell whether you've got a fractal correct or not, right? Because you can actually come in here and Williams fractal tool right here, and it will plot whether you've got a fractal. It will give you your little triangle, right? Because really all a fractal is this low here is higher than that low. This low here is higher than that low, which creates this 3-bar pattern. And I think that's how I have it set up. It might be set up off a 5-bar fractal. Usually I have 3 or 4 of them. So that's why I was actually expecting another one to come out there anyway. So let's see. How's this set? 2 periods. I think I have to have that set to 2, which is kind of weird. If I have it set to 3, I think it expands a bit more. I'm not even quite sure. But bottom line here is, I mean, you can see 1, 2, 3. 1, 2, 3. It's just really that criteria. Do you have a bar where, say, like, here we have a bar that's higher, here low. Well, actually, I'm surprised that didn't fire a fractal there. It might also be working off of the clotheslines as well. I never thought of that. Well, then that wouldn't work there. Anyway. Oh, well, thought I knew how this tool worked. Anyway, I'm not quite sure why it needs to be set to 2. But there with the 2, there is that fractal I was talking about. There's that. So actually, yeah, it looks like I have to set it to get this. So anyway, point of the matter here is that's actually a candlestick reversal pattern that I would feel comfortable trading. So it's a bit of risk. Let's see if it meets our magic 2-to-1 risk reward ratio. If I said I'm gonna try and buy it, it kind of sucks that it's outside Mountain Man. It would have been better had it been in there. I mean, maybe you just get religious and say, you know what, I love this signal, but I have to buy Mountain Man. I don't know. It's up to you. But let's say we'll just go off of the fractal, and then we're gonna risk to a break of the lows. So there's that. Now, what do we get on a 50% move? 2.11. Well, that works for me. So that would actually be a very typical sort of day trader setup. What's fascinating is I think you could make the argument that we're basically getting exactly the same thing happening now. So there's your range. There's our good old reload zone. So those are your previous bottoms. So the question here is, oh, that's unhealthy. Mizings. Actually, you know what this looks like it's setting up as? Although there's no structure to work with. It's too bad because this actually looks like setting up this. almost the same pattern, which gave me this incredibly juicy level. So I get the feeling this thing's going to dump out here. It almost looks like it's like A, B, C, D, kind of down into this area. I'm not quite sure what the logic behind that is. Anyway, and actually, we even saw this yesterday. This was a really interesting anecdote yesterday. Let's see if I can show you. Through Saturday. I don't know whether we need all the fractals on here anymore. I'm in here. Talk about selling a little bit early, eh? Oh boy. Boom. There's another one I sold. That looks more like a range trade. But I wanted to show you. Yeah, it was off of here. This was fascinating down in here. You can see I'm just having a whole bunch of fun day trading. Is this it? Yeah. So at this point right here, man, I thought that the market was just going to puke right out because we were moving through this low. We had lower highs and lower lows. And it was fascinating to watch the market just stopped on a dime, came screaming back to this trend line. And you can see the war that developed off of it. Just incredible battle. I totally thought that was going to puke right out there. So I got a little bit fortunate. I bought in here and I was able to hop off up here. Then you can see it looks like I got a little bit early expecting a bottom to come in against these lows. And it came back in on the buy side in here. Anyway, so it's fascinating. I guess what I meant was just that uptrend line. I wouldn't be surprised if there's some games around it. So if we go back to right now, kind of like yesterday. So there's that uptrend line. What are they going to do around this? My rule is I really want to see like an actual full-blown M. And what often happens is I'll get suckered. And oh man, I hate it. I mean, I tell you, the reason why I have these rules is because I've made so many trades and made so many mistakes. So eventually, hopefully, I learn from all my goddamn mistakes. So, like that historically would get me all bearish. But I don't think that's enough. So there it is. That'd be interesting to see how this plays out. There's your dump. Now, does it quick? Yeah, look at that. I hate when they do that. So what I wouldn't be surprised is, this is an A, B, C, D. This is the objective. You go short right here, you could be trapped. And I hate when they do that to you, right? It's like going short on the break here. You look like a genius for like 2 minutes. Then you look like a total idiot. I hate it. And then they'll just like flirt around with you. You're underwater. Oh, do you want to come back to scratch? Oh, no, I'm underwater again. Oh, back to scratch. Oh, no, I'm underwater. No. Okay, look. Oh, you're so smart, aren't you? Okay. This was the right trade. This was the right thing. And then kapow, huge move against you. Oh, look. I knew it. I knew that was it. Look at what they're doing, the bastards. Wow, totally called that. What do you think? Is that edutainment or what? I knew that was a trap. Was that cool? What do you think? Was that kind of fun to watch? I knew that was a trap. Oh, well. No? I don't know. Maybe I'm just talking to myself. Anyway, good thing we didn't go short there, right? Right. So anyway, play, and you know what? I do like this. This is a lot of fun just playing this because everything that we teach is just we're just screwing. Yeah, because BT goes, yeah, Ken Bryant's on a 1 minute chart. What the fuck? I mean, like, I think it's really dangerous to start thinking that we're trending higher in a bear market. So until I start actually seeing that the higher time frame markets have actually turned up in earnest, I'm still thinking it's a crappy market. So, what does Brian like to do for fun during a crappy market where I don't really want to go invest serious monies in the market because the market sucks? Well, let's have fun day trading, just flipping Ethereums, as the case may be. We could probably do the same on Bitcoin. I'm not quite sure why I picked Ethereum to play with here this weekend. But one thing that bugged me was that I tried to trade the Bitcoin futures, and the contract is so big that I think it scarred me. I don't want to trade Bitcoin anymore because it was like five Bitcoins at like 25 grand a piece. I mean, seriously, huge contract. Gives you vertigo. So anyway, I sort of scaled things down. And of course, this is weekend fun, so the futures markets are closed anyway. All right. So I guess the point I was trying to make there was needed to see market structure below this trend line like this to actually justify thinking short. Quite often, what happens is exactly what you just saw there, where they puked it out, and for like 10 seconds, you feel like a trading god, and then instantly the thing jackknifes against you. And now anybody who's shorted down here, you're trapped, right? And they know that you're trapped. That's the worst part about this. You've heard Brian talk about candle body lows for trade locations. So you can actually see that they're going to keep goading and just bringing the market down to try and goad those people that did short on a stop here just to puke out, take whatever they can get, right? And you can even see, if I was going to short, remember we had said that I thought this was the original A, B, C, D. So interesting how this empire right here is forming off of that same fail level. So ironically enough, there's probably your trade level. Boom, 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 boom. But this implies that you got to be able to handle that huge wick trading into it. And I've never been good at that. That's why I have a really hard time trading empires, because it literally means you have to take that entire formation of risk. Then interesting, you can see this cute little doji. So what happened here, like if we could go down to like a 10-second chart, you can see the market went shooting up. And it went, and because they had a bunch of people that went short here, and they probably had stops like right against that high there, stops against that high there, and stops against that high. And they were like, this is like shooting fish in a barrel. And they just went after those stops. Ding, 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 just cleaned them all out. So market just went straight up into those stops, came crumping down back down, and then just consolidated for a minute. So that empire looks perfectly legit. And look at what we're doing. Now we're coming down into those candle body low levels. And remember, we said this is the area where the sell on stop guys got filled. So those guys all now there, you can see them right now. They just, as soon as price came in here, they bought up and covered those shorts. And they're like, oh, thank goodness. That could have been ugly. So there, I can tell right now, they're sitting there going, okay, now what are you going to do? Then, right, this now, it's back to this conversation. What you really want to see to believe that this thing is going to head lower in earnest is now you want to see that M come in below this trend line. So I don't know what the hell's going to happen here, but just expecting this to puke straight out here, I think is actually kind of dangerous. You might find where, notice, remember we said candle body lows for trade location. Look how this is still putting up a good fight here. Now this kind of looks like a bearish sort of channel here. If you got like an inside bar reversal there, that would be pretty sick, right? So let's just if all the selling's done, right, and everybody's just calmed down, this will just paint a nice quiet inside bar. So stop going up. No, so there's too much volatility in this market. So look at that. So now they're ripping it right back up over the trend line. I tell you, this is why. Like, I don't have these concepts in the course because it's nonsense and I'm just making this crap up. I'm telling you this because I've gone through this experience, like 30 years of this silly game. And I was that guy selling down here. And I had to fucking somehow learn, excuse my French, you cannot short that or you're asking for trouble. There's got to be a full M over here. And the interesting thing now is if they roll this over and break this low, that's still not enough for me because the market is still just playing at this trend line, right? And like I showed you, the funny thing is this is just basically deja vu from yesterday, which is kind of freaky. But this is exactly what they did yesterday. So there's your uptrend line. And man, did they ever mess around with it? So this is sort of where we are right now. I wouldn't be surprised if there's some sort of rally here because now they got to get all the guys that just shorted into that trend line. They got to wash their stops. Then they'll come down and then they'll wash the guys that just took out that low. They might even paint a new low. And you can even see yesterday, I was sort of on the bandwagon. I was ready to go. All right, let's dump this damn thing. And they wouldn't dump. You can see I had 3 here, right? I sold. They wouldn't dump this thing. I instantly turned around and went long. So, and this is the great part about this function is you can just flip around, right? You can I was short 3 contracts and I saw that these sons of bitches were just not going to break it. And I was like, screw it. I don't want to be caught in that trap. And sure enough, they brought the market back. I sold over here. So, oh god, I tell you, it's a hard lesson to learn in trading. You have to wait for that full M. Now, I suppose here's a good example where the market comes down, rallies away, comes down, rallies up, and then pukes. So it's kind of hard to see, but this at least you can see down, up, fail. So there is a new M that you can work with, which sets up this short. Anyway, let's see what they're doing now. I guess what time is it? It's 11:30 now. How are we doing on the level oneers? Are they still going? Love your rants about banks and stuff. You're not enjoying this? Because I'll tell you, this is actually a very educational experience. What's going on here on Ethereum right at this trend line here? Very educational. Oh well, who knows if anybody got any value out of that? That was kind of fun. Right now, would I be doing anything on this? If there was a nice Foggenbaum painted up here, it would have given me some targets. I didn't get anything. It's just straight up, straight down. So I'm a little suspicious. But if after done this call, especially, how would I be looking at this? If they lose this fight here, and I'm not saying the Bull's going to win this. Totally. So Zach here in the lounge just said, this looks like weekend FU moves. And that's exactly what it is. The adults are not around. So let's see if we can go screw as many kids as possible. And the thing is look how far we are away from the lows. So they could chop this way down, the whole way down here. All of this is fodder for them. So don't kid yourself. There's no bottom here. It's just if you're like day trading and you're just flipping contracts, right? You're trying to buy lows, sell highs, kind of stuff. To be honest with you, if I was really paying attention, I should be short off of this M. Let them have some at 2.618. Let them have some more at 4.669. Coming back into these lows, hunting longs. Like we said, there's a nice reload zone and a nice fractal there. Let them have some at 50%. Be stopped out at scratch on the remaining on this move down in here. But look at that. There's a goddamn buy signal. Look at that. The W's coming in as we speak. Holy friholies. That was a liquidity hunt that they just did there, folks. I mean, through and through. So if anything, what I would say right now is there up to there, 50% rule. That should be probably your primary objective. Probably, I wouldn't even be surprised if there's guys that shorted this. Remember we said this empire is a pain in the ass because you got to risk all the way up to there. I wouldn't be surprised if there's a bunch of juicy stops sitting right up there that will actually, guys who stepped in and bought this. Remember, we said earlier, what did I say off of these lines? When I drew this yellow line, let's see if any of you were listening to me, because fuck people. You want to learn how to trade. I'm just spelling this out. What did I say there? 1, 2, 3. How did it go? Yeah. Okay. 6 words. 6 bloody words. Yeah. Thank you, BT. I mean, fuck. That was it right there. And this is off a 1 minute chart. I say this to you guys off of 30-minute charts, off of weekly charts. This is a 1 minute chart, and the same damn crap is happening. And the good part about this is I can walk you through this and we can actually see it play out as the video's going along here. So that's kind of cool. But isn't that incredible, eh? I mean, this is so cliche. And I suppose you could make the argument the exact opposite way. So some slick trader is basically stepping in on the long side right here. But then that means, conversely, remember I talked about that empire, they're stepping in on the short side right here. And this is what you call a range-bound market. What do you think the odds are that this was a reload zone going the other direction? Boom. 61.8, 78.6. Nice. Then you can do exact same thing going the other way. 61.8, 78.6. Nice. So, I mean, it's stunning how cliche this silly game is. And I'm talking to you off a 1 minute chart. Isn't that funny? That's hilarious. Nothing changes in this. It's the universe is just a big ass fractal, everybody. And that, Chris, that's a pretty darn good little piece you want to throw on the YouTube feed, like little 5-minute walkthrough. God, that's incredible, eh? For whatever it's worth, the 6 words were candle body highs or lows for trade location. Write that down. You're sitting here, how many I sit there and I surf through all these silly videos on YouTube. Somebody actually could give you information that you can use. Now, I did see something. I was surfing through the YouTube videos. The way that Google sets up the thing on the phone, I was just sitting on my phone, just surfing. And this guy showed how a midpoint doji, that you see on a price chart actually is a great sort of indication for support and resistance. Just really simply, let's see if I can find one. Kind of like this, right? You see this action right in here. If you do candlestick math, this down candle, right? So if we change this, we'll put a big circle in here and we'll change this. Maybe this will work. Maybe it won't. Who knows? Oh, can't do it. You go to 2M. It's going to give me like 2-month chart or something, probably. Yeah, that's not what I wanted. I don't know how to do that. 2 minutes. That sucks. Maybe I can do like 120 seconds. No, I'm just wasting time. That was 1 minute. I can't do. Oh, there it is. 2 minutes. All right. 2 minutes. All right. Hey, it worked. Look at that. Brian's not that stupid. Okay, so you can see this midpoint doji here. This is a cool concept. And I just grabbed this. You could argue that if you smushed all of these candles all together, you might get a nice little doji where there's the top of the doji, there's the bottom, and we started that study there and we finished it there. And this is basically a midpoint consolidation. So same sort of thing. We took that 1 minute chart and there were two bars, and then we smushed it together. And you notice 2 minutes. Now that's a midpoint doji. But the point here is that you can use this as a reference point, and really exactly the way I just sort of illustrated it there, which is kind of funny, because a midpoint doji is really the market is undecided. There was a lot of back and forth. There was actually supply and demand, and like let's assume that we could do the same thing off of this range. And if you, added all these candlesticks together, you're going to get some sort of doji that looks like that, right? So top end of the range, bottom end of the range, this is where supply overwhelmed demand. This is where demand overwhelmed supply. So same thing off of this little one right in there. And the only reason why I mention that is that this is something that you can see, right? Anybody can pull this up. And you have to use some imagination to understand what's going on here. And, think of just what I did there. So a whole bunch of candlestick math equals a doji. But notice, if you were thinking about trade location, really that's what all of this is about. Why did the market rally into this level and then back off? Could this have been a trade location for you? What do you think? If you had shorted 500,000 Ethereums at that level, how much heat did you take? Not much. There was our little midpoint doji reference. I would have used the high and the low. But in essence, what you're doing here is you're, you've hunted your long, of course, because you love Brian so much. You're a big fan of that crazy reload zone concept. So you're long down in this area, 88.6. Oh, look at these candle body lows for trade location. And of course, maybe we could see that later on. But, 3-bar fractal, whatever reason you're long, some reason down here. And you're thinking about where is this thing likely to stall out, or maybe even I want to, either take profits, or I might even be thinking about hunting a short. That's a handy little reference window. And anybody in the market can identify. So, and I did hear some guy off of Google, of course, selling it was $5,000 course to teach you that. Hopefully I just taught it to you in about 10 seconds. It's not really that significant, but it was kind of cool that I was surfing through Google and somebody actually showed that as a demonstration piece. Hey, pay attention to me. I could actually teach you something. And I was like, oh, well, that's good information. So I thought that was kind of cool. I mean, this isn't the best example. There's probably better ones where it just rolled over and collapsed. But suppose here's a nice little doji, right? You could argue that if you broke this candle apart, it's probably a whole bunch of back and forth. But in essence, top of the doji, supply overwhelmed demand. Bottom of the doji, it's not the best looking doji. I know some people are going to be like, that's more a shooting star than a doji. But point of the matter here is get into this area here on the price charts, roll over and reject it. So anyway, sort of talking out my butt here with you guys, just having fun, waiting for the level oneers to finish off here. Man, that was cool. That was, gee whiz. There's there's the don't do what Donnie don't does, sort of Simpsons reference. And I'll tell you, I can't tell you how many times, how many years it took me to as soon as I see this, go, that's a trap. That's a trap. And learn from this, people. Seriously, learn from this. And then also too, Counterbody loads to trade location, reload zone off of the stink bid move into the tails. What a trade location. And look at that. You'd look like a bloody good trading god right now had you taken that. Damn, stone cold. All right. So let's see. That's Ethereum fun. Suppose what the heck? Let's go take a look at Bitcoin. Let's do the whole thing. Somebody give me a time frame. So, oh geez, look at that. Nice little bottom coming in there. Give me actually, and what's this candle right here? Maybe it is, maybe it isn't. What's that low? 21,143.18. 21,143.18. Oh, it's the same number. That's too bad. Anyway, nice engulfing bar though. Super powerful engulfing bar. But let's go. I don't know. Let's do a daily chart. What the hell? You can see I was having some fun flipping these things, buying and selling and buying and selling. I'm having a lot of fun in the market. But how do you turn that off? We don't. I just wanted to show you guys a chart. Wonder how the hell you do that. Is it? It's not an indicator, is it? Maybe settings, events. Maybe it's this. Nope, I don't see anything here. Oh, there you go. Okay. Positions on since I'm not doing anything. Okay. Where do we want to begin? Once upon a time in a land far, far away. Actually, I know I did notice that I was stressing my computer out quite a bit. I think I got to get one piece replaced. So I put all my open tabs away. I do like to have just in the background 532,000 tabs open, but unfortunately, this computer doesn't like that. If anything, it's probably good. Ironically enough, everything that we talked about off of the 1 minute chart, exact same thing. In fact, why don't we do it off the weekly chart? I'll show you exactly the same concepts just off of the weekly chart. So if anything, this one video puts to bed all of the debate about whether these technical analysis concepts are even remotely similar off of different time frames. The answer, just simply put, is it all is a fractal. In fact, it would be interesting if, because time is a fractal, I wonder if there are beings and existences that operate on time frames that we can't even comprehend. Maybe a million years in our lives is like 1 second to them. So I wouldn't be surprised if everything is exactly the same. It's just all scales in and out. Anyway, there's kind of a fun thought. Hey, you want to hear something really cool? This was such a good study here. Let's in fact, actually, you know what I want to do is let's do a little interactive with you guys. So who can tell me what was the date of the most recent Bitcoin halvening? This actually would be a good May. I need the specific date. I've got to be exactly specific. May what? So somebody says there was a Bitcoin happening in May. I think it was like, I don't want to say the date because I want to see if any of you guys are actually even paying attention. Cheryl's over there on YouTube page. Usually we have Cheryl here in the Hangouts. It must smell. I don't know. 18th? I don't think that's right. How about YouTubers? I don't know what the delay is over on YouTube. They probably make my videos like super insanely delayed so that they can make sure if I say anything controversial, somebody can pull the trigger before any real damage is done. May 11th. All right, great. So somebody give me what's the happening date before then? Yeah, nobody's typing on YouTube here. May 11th. All right, good job, YouTube. Driving. Driving. Hey, you gotta respect Cheryl, man. That's a super fan. She even listens to me in the car. Hopefully I don't say anything too controversial. I know Sharktoshi, he used to teach himself Fibonacci's while on the LA freeways, which is always hilarious. July 6th, 2016. Well, okay. That was the previous one? Was it all the way back there? Jeez. So is it every 4 years that they do it? July 9th, 2016. July 9th. Somewhere in there. And I think actually to make this work, we're going to have to go down to a daily chart. So July 9th. All right. Now, I don't know I don't understand any of the math behind it at all. So please don't think I have any clue about this, but somebody showed me this on the site the other day. I'm just going to I'm going to use the reference, and it'll be interesting to see if any of them in the room tomorrow catch on to this. But we're going to call this the Ice Baby study. And everybody involved knows exactly what I mean. Ice Baby. So what did we say? It was July 9th? I think I got that right. We'll take this and we'll drag it over to here. And May 11th. Oh, come on, you. Oh, jeez. Never works. All right. And the Ice Baby study says we are going to look for 138.2, right? So 38.2, but 138.2 to 141.6. So maybe like 1.272. I'm not quite sure exactly what it is, but what was fascinating is there was some debate in the group that we were having, but this one gentleman showed us, look what happens when we look for 1.312. And I'll let you guys do this on your own for the previous cycle happening. And the hint here is that you have to have the 0 and the 1. They have to be on the respective happening dates. And remember, these happening dates shift. So it's not like it's exactly the same number. But hopefully you'll notice that around that 38.2 of that entire movement, something interesting happens here. Does that kind of catch anybody's attention? I thought that was a bit odd. And then at 61.8 of the entire happening event, well, look what happened here. And then at 78.6 of the entire event, look what happened there. That's kind of interesting, isn't it? What I do notice is that it's like what this study, I think, is sort of saying is like the first 40% of the upcoming move is the orgy. And then sadly, the last 40% is correction, or 60%, beg your pardon, is correction. I mean, I think that's definitely something we can take away from this study. I was pretty darn impressed. So let's project that over time. Does this maybe give us a bit of a hint as to what's to come? I thought this was interesting. So we apply that same logic. This now is that previous cycle. So this is 1.318. Remember, this was 0.382. So this is 1.382. Oh, and look at what happened. Isn't that interesting? Also, too, if we're thinking about when should we look for bottoms, look where that comes in. September, October. And then when should we sort of think that maybe the correction window is played out? There's 78.6 of that move. And then from the 78.6 to the next halvening event kind of idea, keep in mind these are slightly altered. They look a little bit different. I'm going to leave the challenge. What I think would be a fun challenge for you all is just simply to do the previous halvening. When was the previous halvening? I think it was like November 28th, 2012. Where's that? That's right in here, right? November. Yeah, it's the only reference I have. So I don't know whether this is correct or not, but you're saying November 28th, 2012. 27, 29. No, that always happens, eh? You can't get it on there. Anyway, so actually, you know what? I'm not going to leave you to do it yourself. I'm going to do it anyway, just to watch, see what happens. All right, so we'll go from halvening to halvening. Of course, this is 1 day off. November 29th, so November 28th right there. Okay, let's see what we got. Let's see what we get. I was so impressed with this. Like I said, ice, ice, baby. This is I mean, this is the kind of work that TRIers do. They're so smart. So this was the previous cycle, halvening to halvening. Notice 38.2. Didn't quite describe this because probably I think the cycle was slightly different. But the peak came in very early, that particular cycle. But down here, there's that 61.8 or 61.8 kind of idea. Turns out the market bottomed a little bit ahead of time. There's 78.6 coming out the other side. I'm not so interested in these references as I am about these because this is killer. So check this out. So again, halvening to halvening, 1.382 to 1.41. And the boys in the room were having a debate as to which number they preferred to use. One of them was like, I prefer 1.4. And I actually stepped in and I just said, well, what's a midpoint? And I mean, that's pretty freaky. I mean, you want to call a top in the market? That's pretty damn good. I mean, these guy was a little bit early. This guy was a little bit early. This guy was a little bit late. But basically, if you just said, look, we're coming into this window, you better be prepared for a top in the market. Oh, that's pretty damn impressive. And then this is what I think is happening now. And this is how I really like to use this. Because remember, we had sort of said that the 0.618 to 78.6 sort of gave you that bottom of the current cycle. But this, projecting cycle bottoms and troughs in the going forward into the future, I like this because this is exactly what I think is happening right now. Is that everybody and their brother is going to sort of get comfortable with the idea that 20,000 is a floor on Bitcoin. And I'm worried because I remember I was touring through Europe exactly when this happened. Everybody and their brother was totally convinced 6,000 was the floor on Bitcoin. And it went sideways, sideways, sideways. And then you notice into that November, December period, she just puked out one more 50% haircut. So keep in mind, even after a 70, 80% correction, you can still lose half your money if you buy very easily 50% haircut to mark the ultimate bottom. And then what was interesting is 1.786 kind of marked the other side of that sort of saucer trough bottom. So I like the idea of a bottom coming in somewhere in this window. I don't necessarily really want to time it. I just want to, show me weekly W's. You can see how the market tried to put in W's here. Got a little daily one, but we never could do a big ass weekly one. And sure enough, boom, the breakout here all the way in April 2019. So that's like literally, remember, the peak was like November, December 2017. So like, gee whiz, like what, 15, 16 months after the peak, this thing finally gave us anecdotal evidence that the bottom was in. So what does that current window look like? That's the $64,000 question, isn't it? So we'll take our little study and we'll drag one happening event. And then, the interesting thing with this is every single study is slightly different because the happenings are slightly different. And like I said, there's your peak. There's your trough window. And kind of like that last study, what I'm worried about right now is I think that everybody's going to convince themselves that 20,000 is that floor. And then boom, one more dump down below sub 10 Gs, bottom, 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 and then back up we go. That's basically what I think is going to happen, folks. So, obviously no crystal balls, but I was absolutely astounded by this study. And I can tell you now, the cool part about it is we can actually start thinking about it out into the future. So who can tell me when's the next happening coming up, right? So since we already know that we already have this happening date reference, May 2024. So I think what we have to do is maybe go like sort of like a weekly so we can actually get that reference. Right. So March, April, May. So it was May 2011, or it was May 11th, 2000. That's when we had. So is it going to be May again? Do you think? What are the odds? Because it wasn't May previous one, right? It actually shortened up by 2 months. So I'd be surprised if it's exactly the same, but let's assume that it is. There's your next happening event. There's our bottoming window. Remember we said 61.8 to 78.6, so probably something like that. So I was even being a little generous there. Let's throw in a little bit more squigglies just to piss you off. Something like that. Squiggly, squiggly, squigglies. Then your rally begins. There's the happening, right? I think it goes something like that. And then, woo! Do we break to new highs this coming cycle? I don't know. I'm skeptical. We'll give you the new highs just because what the hell. But in essence, you can see. I mean, we've already now. Can you see how it's like perfectly telegraphed? Basically, the November 2025, you should all be like, that's it. No more crypto buying. We turn the crypto spigot off. And of course, the interesting thing is into that window, that's when the market's going absolutely nuts. And that is exactly when fucking dickhead doofus goes out and goes, I don't care what your country thinks about me having stable US dollars. I care little for your attitude. So the central bankers go, all right, we care little for your existence. No more Luna. So just, if anything, all I'm saying is when we get into this window, into this band, that's when you should expect the crypto kids to say outlandish things like, oh, I don't give a shit about these things, right? I said that this time and got smoked. Oh boy. Okay. All right. Well, yeah, and then also too, dog money, right? Oh my goodness. Wouldn't it be so funny if he actually got convicted of racketeering and he lost his entire fortune because of dog money? Oh goodness. Can't write better fiction than reality, folks. So, calling this the Ice Ice Baby tool. Um, I would give full acknowledgement. Andrew, actually, it's Andrew squared. So, if they want to take ownership of this study, I will prop them up and make them as famous as I possibly can. I was exceedingly impressed with this idea. It took me a few times to sort of get the hang of it and try and understand what the heck this is telling me. But long and short of it here, based on our very quick little overlay here, I actually think we're sort of right on schedule with corrections, peaks, correction windows. And if anything, what scares me is I think we're going to be lulled. You can see where this 1.618 is, right? And I showed you in this last cycle, it was here, right? Kind of like what 61.8 was the actual dump. But when we did it last cycle, right, from here to here, you notice that 1.618 was through there. And that would correspond nicely with what I think is going to happen here over the next, man, I don't know, maybe 2 or 3 months in crypto. Is I actually think there could be a nice little counter trend rally. People are going to sort of get comfortable with the idea that 20,000 Bitcoin, that's fair value. All right. We even have what's scary. It's kind of interesting. I don't necessarily buy into it, but I do hear a lot of talk along these lines. Uh, um, let's see, which one is it here? I think it's this one. I heard, and I even heard the Glass Node guys even say this recently, that if you average everybody who's got machines running, whether they really should be having machine running or whether they shouldn't, um, but the sort of net average cost to mine Bitcoin is somewhere in this sort of 19 to 20,000. I think it was even like 17,000 or something like that. This S19P study, this was put together by a site member. I think he's got a pretty good head on his shoulders. And he said that he does. Yeah. Well, so that's who gave me that data. So I personally believe that, really, people who are running economies of scale kind of idea with regard to mining and have very, very, rock bottom sort of business model cases. I think their cost of production is down here. Of course, people will debate that with me, but I did notice is that the Glass Node guys even made reference that they think a lot of the sort of average cost of production is here, and I think this is a trap. So I do believe by the end of this cycle, a good portion of the people that got into the Bitcoin mining business all through this, they're all going to be washed out of the market. And actually, a really good anecdote to really understand that is we actually go and look at the people that make these semiconductor chips. And of course, we all know the story going on in the broader market. You can't even get these chips. And the automotive industry is probably going to end up outbidding crypto miners and stuff for chips. But what's fascinating is that you can see NVIDIA turned up in earnest, right, when Bitcoin turned up in earnest. Remember we said that the buy signal there was like April 2019. right? So that's all through, I guess, there's where NVIDIA's buy signal was that June of 2019. That was right in there. There was the killer bloody trade level for uh, for NVIDIA. And look at that tear. But what direction are we going in here? This looks to me like this is M'd out, not Wing. And it's interesting how we just broke to new lows here. So if anything structurally, this is a bearish chart. It's enjoying a counter trend rally, probably to fill in some gaps here. So I wouldn't even be surprised if our summertime rally takes us up into these kind of horizontal support and resistance levels, but definitely fills in like all that. That's all got to get filled in. And then, of course, we all know, I suppose you could argue, well, hold on. I had two thoughts in my head there. So, first thought, we have a megaphone, and I believe this is sort of what's going to happen here going forward is, believe it or not, I could actually see this thing rally all the way back up there. But then sometime in the fall, we actually come all the way back down to that megaphone level. That actually lines up perfectly with my sort of outlook. And the interesting thing is if we put BTC USD, odds are, yep, chart looks very similar. So you can see we're probably going to revisit these highs up in here. So big rally up, then pull back. According to this, we actually have the potential that this is one big honking head and shoulders, and we turn up. So it's going to be really interesting, all the Bitcoin community, to watch how the market acts against that low in particular. That was the low from 12th of May. And actually, it was so sad because in very typical fashion, Bitcoin always pukes on my birthday. Never a fun time around my birthday in Bitcoin, and actually all risk assets. I always tell people as soon as it comes my birthday, start cashing out on all the crap that you bought and get ready to go spend all the money on Brian's birthday gifts. Because I'll tell you, if you don't, you're just going to give the money back to the market. Anyway. All right. So point here is along the lines of that NVIDIA. And really, I hate to say it, you look at this chart. Not interesting. There are actually some. I think it's like the GBTC, this grayscale trust. I don't even think it went to new highs. No, it didn't. So isn't that fascinating? How technically, this is like I guess you could even say a mutual fund, a stock trading vehicle that's supposed to replicate the Bitcoin price action. It trades over the counter, and it's interesting. Of all assets, this is the asset that the Rothschilds first bought to get into Bitcoin years ago, when they actually publicly disclosed that they were buying into Bitcoin. So I guess that in itself was the absolute guarantee that this thing was not going to go off the board. No way Rothschilds are going to lose money. So I might even argue, just looking at this price chart, there's actually your path. So, yeah, maybe there's a little bit more to go here. It could be some monkey business. But fascinating, how we're basically down. You could even argue that this is just nothing more than a Wyckoff check against all these levels here, right? Isn't that interesting? Because this is, remember, this was our panic. Shouldn't we debate marketing our kids' future? Right? That event right there. And I remember we had like TRI site members who actually stepped in and bought Bitcoin right on that event. And look how cliche this is. Remember I was saying earlier where we look at the 1 minute charts, and I was going to prove to you guys without a shadow of a doubt that the time frame doesn't make any difference. So now we're looking at a daily of an over-the-counter traded instrument that, of course, the regulators don't want you to touch, but this is the instrument that the Rothschilds actually bought. So I find that amusing. But, I don't know. What do they say? How often do these silly gaps get filled in? Look at that. That's crazy. Jeez. Anyway, so at or below reload zones. Maybe there you go. That's probably a little more dramatic image, so you can really appreciate that. That's incredible, eh? 88.6, fill the gap in right against the bottom end of the range here. All right. So, I suppose we could go something like that. Maybe against those. So that's probably all right. And like that. So, in a weird sort of way, this is very much like the two applications currently on investors' radar are those that that's gone. All right. If you had just put yourself on a dollar cost averaging plan of this range, actually, I think this study here is really this same study. And of course, Brian, he loves reload zones inside reload zones. Brian, he loves 78.6s. Simon Dixon says buy your Bitcoins at 80% corrections. So anywhere down in here was just a killer level. So, okay, big green boxes. So we're finally doing that. We've traded down to the bottom of 78.6 and we're kind of puking out the bottom. So are we in maybe this phase right now? Could be. I like that thinking, I think if anything, this cycle, it feels as though Bitcoin's moving a little bit faster though. So anyway, we are lower than 80% of this range. Do you want to just go off of 0? Right, that's off like 50 cents, whatever. And maybe you move your fibs down. If I change this to 0, it's not going to make that big of a difference. But if I just go 0. All right. So, yeah, there's your reload zone. In fact, yeah. So you can see we even just touched 78.6 and it sort of snapped back off of there. But the interesting thing about this is really your trading range. It's absolutely huge. Let's try that again. Yeah. And, the interesting thing is I did one of these studies for crude oil a few years ago. And what's fascinating is the crude oil market actually has worked its way right up into that level now. So don't kid yourself. That can very easily happen. But bottom line here is this thing is a bear until this line is not only broken, but we actually want to see market structure on the other side of that trend line. Is this not sound familiar? This is exactly what we talked about on the 1-minute chart of Bitcoin. Oh, it's crazy. That's impossible. How can it be? Or no, that was Ethereum, wasn't it? It wasn't even Bitcoin. It was Ethereum. I don't trade Bitcoin. Bitcoin's for chumps. Yeah, let's see what happened. Yeah, look at that son of a bitch. Right? Same thing. Was it a good idea to take your short on the break of this trend line here? No, bad idea. And sure enough, there you go. And actually, this is kind of interesting. So the same sort of conversation, there's your trend. So look at where we are now. What a surprise. I mean, God, stuff is so crazy cliche. Actually, it'd be interesting. I wouldn't mind even just doing polls now. Would there be any demand? Put a comment in the comments, if you're watching this through the week. Would there be any demand for you to be able to come to a place and do this in person with me side by side for like a week or two? Would there be any demand for that kind of service? Because that's really what I want to try and create in the there's Seward. Sounds lovely. Great. That's really what I want to try and do in Portugal is I want to create that environment where we just do this side, like we have a big screen on the wall and we just do this, in person. Anyway, I'd be curious to, so anyway, so as we sort of said with the GBTC, and this is now back to daily time frame. There really isn't anybody, and I would just simply say this is a very wide no man's land. on a daily basis, probably find actually that's surprising it because I think that there's a trend line here. Maybe off of that low. That's a tough one. I'm not quite sure how that goes. I always debate, how do you? I mean, because textbook wise, I'd want to do the trend line off of market structure there. And I think that's relevant, especially with that. Notice that now becomes a pivot low to pivot high trend line. So that's actually extremely valuable. And, oh yeah, lo and behold, look at that. As soon as we lost that level there, look out below. So if that's the case, then I can't really use trend lines off of that low. So where do I go? I guess I'm going to have to go off of the next pivot low, something like that. All right, well, that helps explain that. We probably should zoom in here so we can see this a little better. Something. And see, the thing is, there's also this one too, because really textbook-wise, I'd want to do it off of there. Market structure. Market structure is really what defines these trend lines. So really, I don't know which is lower. Let's see. That low is 705, and that's 703. Yeah, so that's important. If we're going to do it, we have to do it off of there. Okay, so now let's see what we got. All right, so that was that primary trend line. Interesting how when we changed it, it moved off of that high to low level. So that's kind of interesting. You could, and actually, I like to just actually draw that high to low trend line. I'll label it high to low because I think that is super relevant information. Low to high. There we go. And as we said there, I think that was probably an important failure point right there. Interesting how this is what's fascinating about trend lines. This was the original market structure, right? We can let's make it like a big line so everybody can see it. All right, so that's the original market structure. When the market actually goes up and kisses it from the underside and fails, huge sell signal. So it's interesting how just off this lower time frame, we went above it, then below it, then above it, then broke out, and then started to fail away from it. And notice over time, you would think, okay, this trend line is irrelevant now. But notice, look at what just happened. And that's fascinating, right? So the market never, it lost it here and it worked sideways. And then eventually, look how it came back to it. So it went blasting up and actually, right? Because this market opened here, went higher, came down, tagged the trend line from the other side, and then closed there. And then it did it again. Like now this time it opened up and it went through it. Oh, that's a sell. No, it isn't. Be careful. Market structure below. Sure enough, gapped higher. Look how I used the support again. And then look, it did it again. Like this is why you cannot take this short trade on a break of this trend line. You're going to get your head handed to you. But what's really interesting about this is look how this actually defined the resistance up top here. Look at that. That's incredible. This was the original market structure bottom trend line. And that just basically totally nailed the top. What would I want to see to justify acting off of that? Do I have a signs of a bearish divergence? Wow, look at that. Can you see how that pushed to new highs there? Nothing on momentum. RSI looks like poop. Willie even was stupid. Imagine that. Look at that. We even have a volume divergence. Look at the buying pressure here versus the buying pressure here. There's no buyers up here. And we even have an OBV div. Holy free holies. What a signal. So, I mean, incredibly difficult to take a trade up here. I'm not going to sugarcoat this. Trading is difficult. It's psychologically taxing, right? But here we are coming up into reload zones, I suppose. And that, this was the dog money. move here, and Mr. Musk and all his wonderfulness. Then the dump, then the counter trend rally. I think that's right. Yep. And this failure against all these highs on the momentum divergence in the reload zone and the sort of coup de grace was the original trend line that actually marked the bottom of this move off of that March. And actually, isn't that interesting? You could argue this is when the Fed took interest rates to like zero, right? This was that event. Shouldn't we be mortgaging our kids' future? Shut the fuck up, you stupid idiot. You don't know what the fuck you're talking about. Well, actually, he did know what he was talking about, and this is all insane hyperinflation. And now they're trying to put the genie back in the box. The only problem is this was all done on purpose. But we're not allowed to talk about that kind of stuff now, are we? The Great Reset. Thanks, Klaus. Love you. Hugs and kisses. I might argue, and actually, it's interesting to watch in the marketplace. We will see. I actually think what's going to happen here is we basically had the pendulum swing violently in favor of the hyperinflation. And yeah, now we've got it. If you go to the grocery store now, I couldn't believe it. On Friday, I went to the grocery store and I didn't even really buy that much stuff. Maybe a week or two supplies, $75. What? You got to be kidding me. So it's almost like in Vancouver. Now, when you go to the grocery store, it's actually the price of what going out to dinner used to be. I don't even want to go to a restaurant in Vancouver. I'll probably puke if I saw the bill at a restaurant. And I remember, through this silly, as I said, I believe that this was all planned. The Western societies could not sustain these deficit spending environments indefinitely. The baby boomers, I mean, look at the guy who's president of the United States of America. He's basically a walking corpse. They're too old to put up a fight about it now. And what's fascinating is I do believe that Mr. Winnie the Pooh personally is on a sort of vendetta mission that the West should live a 100-year similar window as the Chinese just went through. He has repeatedly in his career made reference to this 100 years of humiliation, and I believe that is what he would ideally like to see, just in the opposite direction. And I suppose if you get it to the point where prices just continually inflate, I don't see, you look at my country, the leader of my country just doesn't get it. He does not understand the basics of Milton Friedman's argument that you increase the money supply, you're going to increase consumer price index. It's just that simple. And of course, that's a broad basket. So things like food at your grocery store, energy for your car, they're not going to go up high single digits. They're going to go up, like, I think gas prices are like up 40% just this year alone. And these governments, buying into Klaus kind of stuff, especially this sort of new age, this new generation of politician, they've spent their whole lives in a falling interest rate environment. I don't even think Justin even knows what a rising interest rate environment is. And what I do find really interesting, I mean, I don't know whether you're aware, but if you look at things like residential mortgage rates, there's no quid here. I had made the conjecture that we were going to stop at 127. No, sorry, Zach. He bet 127 to 141, so he's still on the table here. But who knows where the hell these damn things are going to top out? And number one, listening to Powell, he said that we've got a whole bunch of mortgages to unload. That's supply. That is not demand. That's usually implies lower prices, i.e., higher yields. And you listen to. I heard a report the other day that said that for Canada to hit housing equilibrium, it must build 22 million houses. Now, I mean, come on. It's like they just they're just like making stuff up. Yeah. Cool. I mean, no offense, but that's basically like doubling the population of the country. All right, and that's how you hit equilibrium, and it's so funny, right? They jam through like Canada's population growth. They jam through all the new immigrants into the country. Oh, but by the way, there is a 2 million person backlog at Borders Canada or whatever the hell they call it that must vet every person that comes into Canada for citizenship and residency. And I got to tell you, it's actually a pretty onerous process to go through all that. So onerous that, dear leader Justin, he's living in it's what this reminds me of? This reminds me of Napoleon. No, not Napoleon. Uh, Louis the 16th. Louis the 16th, his wife was Marie Antoinette, right? I think that's how it went. And Marie Antoinette had in the French countryside a whole medieval village of like 13th century France kind of thing, a whole medieval village all put together. People actually lived there. There was a blacksmith, there was bakers, the whole thing. I mean, it was a whole sort of make-believe wonderland that she had completely created, and she would go there and just spend time living in her sort of make-believe medieval sort of surf paradise environment. Of course, it wasn't real, and nobody ever suffered. And of course, everybody was basically a state employee that worked there. But it's just a really good example where I believe that Justin lives in this make-believe world, that he doesn't really understand the full picture. Thank you very much for the positive words regarding Liam. I love that kind of thank you, Jason. Appreciate it. I think to a certain degree, he's living in the Klaus world. Klaus probably sat there and just, dripped sugar into his ear. Like he said, we've infiltrated 20 out of the top 40 cabinets or whatever the fuck he said. And of course, Justin goes and hires people that are finance ministers that have absolutely no experience in the Department of Finance or even probably managing their own personal checkbooks. And they say things like, well, the reason why Canadian housing prices doubled in the past year, which is just ridiculous, or I think it went up like 50% or something. Well, it's because Canada is so popular, and Canada is such a wonder. Oh, yeah. Immigration Canada is saying, yeah, we got a hell of a lot of people coming. They're all stuck in the queue. And look, the queue goes on 47,000 miles. There's 2 million of them all lined up, one after the other. Look out your window, Justin. You can see the queue. It goes right across the country. And then to add insult to injury, right? Again, somebody's like, get ready to yell out your window, Brian. You find out that 2/3 of these people coming to Canada are coming here and they are going instantly on welfare. That means the citizens that live in the country of Canada are actually paying their wages. What? Why are these people coming to our country? What the fuck? Who gave permission for this to happen? That literally I have to pay these people's wages? And of course, that's not the case because Justin is just printing money to fund all of this. There's no tax revenue to going to pay any of these people their welfare benefits and their health care benefits and stuff. It's like he's living in a make believe world. And the problem is, at some point, the rubber's going to meet the road. And then you have to ask yourself, why? Why is all of this happening? And sadly, I do believe that there is, to a certain degree, a cabal that is, Jekyll Island. If you don't know what that is, Google that. Then they play world politics as much as any totalitarian dictator. And they have just as much power, aspiration as any totalitarian, authoritarian autocrat that we all are, the West, are programmed to hate. Uh, they all do it sort of very cheeky, under the covers. Everything, of course, completely legal. And they even hire very well mannered lawyers to be their mouthpieces, to talk to the public and spoon the rhetoric. And of course, once you have somebody in an indebted situation, they're your bitch. I mean, it's just as simple as that. Do any of you think that the United States of America could actually, and for that matter, any of these Western countries could actually stand up to the banksters and say, you know what? We're not going to make interest payments on these debts anymore. We've had enough of being enslaved to you. This isn't really working for the citizens. Good luck. So then that brings us to, okay, so they're running the system, they're running the show. There's not a hell of a lot any of us can do about it. So, what is their plan? Why are they doing what they're doing? And the simple fact of the matter is, first and foremost, the bank makes money when they lend money out. So, if this number is constantly going up, what does that mean by definition if we just continue play the game? Do bank revenues and do bank profits keep going up if this number keeps going up? Answer is yes. It's really that simple. You can literally see the spending that's happening here. I mean, it's literally you will see that this will rise probably more than your entire lifetime's net worth. It will rise just as we're talking here, which is so depressing. And make no mistake about it, this is the U.S., but U.S. is the hegemony, and fascinating how they've got China. China quickly came on board. I mean, look at that! All of a sudden, instantly, now China's up here, right up at the top of the list. Not quite sure how that happened that quickly, but basically, there's China number 3 on the debt list now. What's scary about China is not so much the government debt. They can actually go and bail out their private sector if they want to. That's a good question unto itself. What's scary about China is the private indebtedness, like private citizens, because they all went and bought the real estate bubble in there, and the bubble's collapsing now. So does that mean like literally 1 billion people's life savings are going to be wiped out, and how do they react? And unfortunately, I do believe half of this sort of zero COVID policy has nothing to do with the sickness and has everything to do with how do we get out of a real estate bubble bursting and the leadership actually stays in power. I know. Let's lock everybody in their personal prison cells. We won't even allow you out of your prison cell. You didn't even realize you were in prison, but you are. And the worst part about it is, hell, at least in prison, like you ever watch The Simpsons, the episode of the guy's a prison guy, 3 squares, 3 squares, 3 squares. Prison system's not so bad. You get 3 squares. If anybody knows what the hell that means. Hell, they had stories coming out of China where people were in these apartment buildings and there was like literally no food for like weeks. Shocking. Just, oh God. I feel really sad for humanity when I hear stories about what's happening around the world. Really sad for humanity. But anyway, that's here nor there. Totally different conversation. Question is, why are they doing what they're doing? Well, number one, we said U.S., of course, is world hegemony. Nothing's changing there. We know that every about 80 years, you have to sort of hit the currency reset button because all of the sort of borrowing power of the previous generation has been shot. And I would definitely think with the way, if we keep the debt to GDP ratio, it's interesting how this public debt to GDP is at 100%. I actually, and maybe it's because it's public and private put together, but I heard that these numbers are running at about 130% right now. So actually, I'm a little scratch my head curious about that. And make no mistake about it, there's Canada's in just as bad a situation. If anything, probably very similar. The one good thing for Japan is that Japanese themselves own their debt, whereas all of these other countries, they all own each other's debt. So that means that the market owns a debt. And this is why when, in years gone by, one of these countries would balk on their debt, especially, like Brazil, right, and Argentina and stuff. And then, the U.S. is basically the biggest debt holder of all of these countries. They just crap on the country for like 20 years and make their citizens' lives hells. Not really a big surprise. So, but anyway, point of the matter here is, how do you keep this game going? The answer is you inflate the actual size of the economy so that this number doesn't get out of hand. And what's fascinating, everybody, is actually when I started in the securities business, the economy was $2 to $3 trillion. So you can see, just even I've been in this market business since basically the 1990s. Got my first job in '88, and the economy was basically 1/10 the size that it is now. Now, is the economy itself that much better? Not really. I mean, I'll tell you, if anything, what bothers me is, like, there was a whole bunch of development here in Vancouver, but 20 years after the last big development wave, half of the developments, condos and stuff like that, had to be literally torn apart and completely rebuilt because they had this syndrome called leaky condos. Anybody who's watching this video from Lower Mainland knows exactly what I'm talking about. And in the 1990s, real estate was really, really bad here because if you bought any place, odds were that it was built in like the 60s or 70s, or maybe even the 80s, and it was going to have a complete refit to get rid of all the rot and mold. Now, is it raining any less here in Vancouver, British Columbia, Canada than other years? This particular summer, I mean, there has been no summer. It's just all rain. So I don't think the weather has really changed dramatically here in the Lower Mainland. My question for you is, there's been such massive real estate development here in the Lower Mainland. Do you think the quality of that real estate development has gone up? Or with the Asianification of our society and our economy, maybe a few more corners are cut here and there? You probably know exactly what Brian's thinking. I won't answer that question for you. I'll leave it to you to figure out. My suggestion is there is a ticking time bomb of really poorly built places. Like they even say some places in China, when they put the places up, they don't even bother putting things like elevators or electrical wiring in the buildings because nobody's ever going to live in them. And you know what I found in here in Vancouver, which bothered me immensely, to keep this fucking Fakezi going of the real estate speculation? Now you can buy partial ownership of a house. Now, how the hell does that work? You either own the house and you live in it, or you don't. There's no such thing as owning half a house or a quarter of a house, unless, of course, it is a speculative investment vehicle. And I think that's almost entirely what Vancouver real estate, and to a certain degree, British Columbia has completely sold itself out to these Asian and international communities. This is a fantastic place to launder your money. And of course, it's all nice and legal if you can get your money out of your country and park it here in Canada. And we've got this crazy prime minister here in this country who actually, I think, works for those international investors, not for Canadians themselves. So he's not going to tip the boat for you guys. You international Klauses, you're safe. Just keep bringing that money to Canada. Keep the bubble inflating, please. What? How does that logic work? Oh, and by the way, there are actual signs of cracks in the Canadian housing market, but you're not going to hear that from any politician. And as I said, there's no way you can have a sustained housing market in this kind of environment with the price of home ownership itself consistently going higher and higher and higher. What the hell did I do with that? Maybe over here? Oh, yeah, I guess it was. And this is what gets really scary is Janet Yellen, in all her wisdom, came out here and said, borrow, 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 borrow. Well, interest rates are historic lows and they're not going to go up anytime soon. What? Sorry, Granny. You couldn't have been more completely wrong with that prediction. Look at that. That was the absolute worst economic advice possible you could give. Why did this actually happen? Did it happen because the banksters told the politicians, hey, you MMT people, go and have a party. Go and borrow all the money you want. Interest rates are wrong. Hyperinflation. Thank you very much, democratically elected politicians. You all, of course, work for your special interests. Nobody's actually working for the special interest of the public. Terrible. Terrible. So irresponsible. It's ridiculous. Anyway, it is what it is. Damage has been done. So Merry Christmas. We no longer are in those lower interest rate environment. That's over. All right. I should probably talk a little bit about there weren't really many questions, excuse me, this week. So that's why you got a whole bunch of rant there. I have no idea whether I gave you anything of any value or not. What is it? It is 26. So that's over here. Looks like there might have been. So I'll work backwards here. But anyway, 26. Hi, Brian. Would you please explain micro futures works, margins, contracts, fees? Would you mind showing a real trade, maybe with a paper account? Thanks in advance. Not really that difficult. I like to go to, your broker itself will give you margin rates. So, actually the place that I'm trying to get my most recent account up and running, I wanted to, and I'm still trying to fund it. So, I don't think I'll show you anything. Oh, I have to do all the two. Anyway, the point here is go to your broker and they will have a margin rate sheet. I'm not going to go and log in and all that and show you my account. That's a bit tacky. So if I just go like my AMP margin rates, not really too difficult. Every exchange sets a minimum margin requirement. And then usually what ends up happening is the brokerage house itself will actually charge a little bit higher margin rate. And then, of course, it's always a competition between all the firms who can be like the closest to the actual exchange minimum margin, and then also commissions. So it's a constant sort of battle between firms and a competition. And AMP even themselves say, if you can show us a lower margin rate or show us a lower margin or commission rate, we'll match it. So, point here is these are generally very straightforward. It's not rocket science, but as you can see here, uh, AMP has you can actually trade stock index futures, and then they also have like the micro contracts. I think these are your micros that you're probably interested in. So they can do things like S&P. I guess these are all basically stock indexes. I don't know whether they have micro commodities or not. There's the currencies, energies. So there's crude oil. I don't see. Oh, micro. There's micro crude. So it's pretty straightforward, and you can see what the margin requirement is. So it's just simply, obviously it's outside market hours, so I can't show you sort of a live trade as it's happening right now. As soon as I get this AMP account funded, and then in daily briefs and stuff like that, I can show you these things as they're working away. It's not that big of a deal, but you can see here, what we want it, and of course, every firm itself is going to have very specific rules. So you better read specifically the rules of your specific broker. You quote some other broker's rules to your broker, and they're going to laugh at you. Those are their rules, not ours. So you got to play by whatever the rules specifically to your brokerage is. And I can't comment. I don't know what firm you use. Maybe you use a firm that has different rules. So first off, you're going to contact your broker, and I would even call somebody on the phone and just have them walk through verbally exactly how the whole process works, just so you understand it completely. It's probably worth taking a half hour, 45 minutes out of your day one day to try and do that. But it's pretty straightforward. In sort of this modern day and age, it's not the right terminology. Just recent market development. Over the past 20 years or so, somebody figured out that if we create a product that is reduced cost, then we can have more people participate. And if we create a product that you're only allowed to have it on during market hours and you get penalized if you have it off of market hours, then that means every single day, all of those people are required to do one buy transaction, one sell transaction. Ooh, cha-ching. More money. Think of all those fees. So to create a product where somebody can't have it on before the market open, and it must have it off by the end of the market day, huge incentive for the industry to do that. Massive fees, massive profits. If anything, it's probably Short says what I find scary is what is this? What I find scary is you can lose more than what you invest in the trade you put on. Oh yeah, easily. Anyway, the point here is like these micro contracts. And I think I was trading like the Dow, and I was trading, what else was I trading? Yeah, I think it was just the Dow. I haven't done the ES. I think that's like a buck a point. I like the Dow one. Like the big contract on the Dow was $5 a point, but the micro is like it's like a buck a point. So it's sort of like Dow moves 100 points in a day. Well, it's $100 in your pocket. I could work with that. Anyway, really simply put, if you wanted to put this position on as sort of like a position that I'm going to hold overnight, and I like to go to there's one site in particular I like to use, TFC. I've used these guys for years. They're kind of a third party, unbiased, it's 1980s website, so you can see they don't invest a lot in technology. But if we go stock indexes, let's see, commodity charts. And we go stock index. There's the Dow. Okay, so here's the big boy, right? And more importantly, we want to see what the margin requirements are to strap on a big boy. So you can see initial margin is $3,503 and maintenance margin is $2,802. So that means that what you're doing is this, you're not actually buying something when you buy one of these futures contracts, even though that doesn't make sense what you just said there, Brian. But believe it or not, you're not buying anything here. What you're doing is you are controlling this futures contract, i.e., and legally it's an obligation. The level that you buy it at versus the level that you either sell it at or it settles at, you are legally obligated for the difference. And you just simply multiply the size of the contract out. That's the easiest way to do the math to figure out what it is you buy or sell. You know, the easiest way I like to illustrate it is if we use something like the corn futures. I mean, nobody transacts in corn. All right, maybe the Dow, maybe. And also Dow, you know, it's a stock index. What the fuck is that? Everybody knows what a bushel of corn is. But the point here is you can see if I wanted to strap on this, initial margin is $2,025, maintenance margin $1,500. Same sort of thing as the Dow, which is just a stock index. This is actually controlling 5,000 bushels of corn. So, I mean, you think about it, you know, the price here is $7.5 roughly. So $7.5 times 5,000. That's what? That's like $35,000. That's something. It's a bit of money. So usually margin is supposed to be like 5% of whatever that notional value is. So 5% of $3,500 sounds to be about, you know, $1,800. So not a surprise that sits at about $2,000. Keep in mind, this thing is up and down like a you know what. So they want to try and make it. Now, like I said, you're never actually buying anything. What you're actually doing is you're putting down sort of like collateral. And you're not putting down the entire 35,000. You're putting down about 5% of that value. And technically it's what's called a performance bond. So, you know, there's really no point in getting into the legalese of all that nonsense. The point is that that's the amount of money you must have in your account, cash on the barrelhead. Well, not even cash. You could have securities that you can borrow against. Sort of, you're going to take margin out, which is going to get really confusing. But believe it or not, like let's say you had a government bond in your account, the brokerage house will let you borrow against the value of that bond up to like 95% of the value of the bond. So it doesn't necessarily have to be cash, but you have to have purchasing power. So let's put it that way. In your account to the tune of $2,025. You have to be able to put up that performance bond. And the key here is maintenance margin. Remember, you're on the hook for whatever the difference in price is. So let's say, hypothetically, just keep it really simple. Let's just do ZC1 exclamation mark. All right, and actually, this is an interesting situation. I don't know. Actually, it might be good to ask Sjord. Sjord, what do you think? Should TRI go and buy some corn here, or maybe do we want to think about maybe selling some corn? Actually, anybody answer. Crickets. Cole wants to short that damn corn, and it makes sense too, right? Because of course, all the politicians and shit are all juicing the fucking Ukraine story up the butt. It's Russia's fault for this price inflation. Well, I don't know. Maybe yes, maybe no. Keep in mind, this market was moving up all through this. I don't think Russia was doing anything there. Russia came on the scene, I guess, right about here. So that's the price inflation that Russia's on the hook for. I don't know. Anyway, I would say this is more just very typical seasonality of this market. Remember we talked about why is this economy inflating? And the answer is that debt to GDP. Can't let that number get too high. If it does, then the whole damn thing falls apart for the banker business. So we're going to keep increasing the money supply to keep increasing the size of the economy. So that way they can keep issuing more debt. So keep in mind, a bushel of corn doesn't really care. A bushel of corn is a bushel of corn is a bushel of corn. So if you go and dilute the crap out of your currency by printing money, in reality, if you take that money printing out of the equation, this is the sad part about all of this, is if I take the money printing out of the equation, how does this go? I remember. Let's see what happens when I do that. Hey, there you go. There's your price of corn. And keep in mind, they've done this money printing for so long that, there's the 1981. That was the last commodity cycle peak. What do you think, guys? Are corn farmers doing as well as they were in 1981 price-wise? So this is the reality of the world that we live in. Of course, the fear mongers and stuff like that, they're going to tell you that the price of corn is going through the roof, but actually it isn't. That's the saddest part about all of this. The banksters are pulling one over on all of us. They're pulling one over on the whole damn world, which is so tragic. So I would actually argue corn prices really aren't that high, but relatively speaking, people are believing that they're high. What they don't realize is that their standard of living has just been absolutely destroyed by the banksters. But that's not the point of this conversation. The point was to explain margins, wasn't it? So he's back on those goddamn banksters. Okay. So we just plopped down. What did we plop down? Like $2,000 or $3,000, right? To control one of these futures contracts. $2,025. And actually, just out of curiosity, let's see what AMP wants. AMP wants, there we are. Maintenance. Day trading, even day trading corn, $1,500. So that's interesting because remember I had said earlier, it would be in their best interest to try and create products that are smaller margin requirements and incentivize the public to play a little bit more in the game. And of course, if they can't put the product on before the bell and they have to take the product off by the end of the bell, and that's how they can qualify for those deep discounts, then hey, that incentivizes them to do this day trading. And you see that the day trading margins, generally speaking, they're usually quite a bit less. Like we noticed, like here, for example, the micro ES. Look at the day trading margin to strap on one contract. But if you want to hold that thing overnight, look at it, it's $1,150. So, the micro E-mini NASDAQ, $100 performance bond to put the position on. But remember, by the end of the day, you better have the damn thing off. Maintenance margins to keep the position on overnight, $1,700. So you can see for a little player, let's say I got a $5,000 account. Am I going to want to tie up all of my purchasing power just having a couple of these contracts on? to hold them overnight, maybe I could do like 3 contracts tops, but already I'm brushing up against that 5,000 limit. Or at $100 for a day trade, I can't put it on before the opening bell. And I got to take it off by the closing bell. With a $5,000 account, oh man, I could put on a lot of contracts. And I could be a player. So just think of the day trader margins are greatly reduced. And oh, by the way, these are the micro contracts. The full size stock index futures, they're more money than we could ever afford. None of us probably watching this YouTube video and participating on the YouTube site, we never use these because they're just way too big. Look at these numbers, so huge. $13,000 to keep an E-mini S&P 500. That's a 400 contract on the books overnight. Yeah, you're going to really tie up $13,500 on one futures trade? I don't think so. Just in margin? I doubt it. There's the E-mini 500, and it's $11,500 to keep that overnight. It's $400 day trading margin. Even this would be pretty steep for a typical retail schlub, right? The micros, you can see $40, right? That's 1/10 the size. This is a more manageable size for retail. So first and foremost, just the size difference. The only difference between micro, right? That's 1,150 maintenance, and then the regular big boy is 11,500. So you can see it's quite literally like 10 times the size of the contract. That's the only difference with micros and the E-minis. And then this isn't even the regular S&P 500 contract. I don't even know if they even have it on here. But the regular S&P 500 contract, it would be staggeringly expensive. I don't even see it on here. It's not funny. They don't even show it because it just would be a ridiculous amount of money. Interesting. Oh, I just don't even see it. Anyway. All right. So difference between micros and minis, this is 1/10 the size. Margin requirement, remember, you're not buying anything here. All you're doing is you're putting down the performance bond, and you must have this in your account in purchasing power. Now, do you have like $40? I don't know how you could open an account without it, but you have to understand that you have to maintain a certain value of the account with the position on. So yeah, you can put the day trade on for $40 margin, but this to me looks like it's saying that you have to have, and I don't know, I'd have to read the fine print about what they're saying to be exact. I'm not exactly sure, but my interpretation here is you have to have at least $1,150 worth of equity in the account to keep the position on. And what do I mean by that? Let's say you opened up the account with $2,000 and you strapped on this day trade position at $40, and we're doing the S&P 500, so we might as well just keep working on this. Doing corn there a minute ago, but let's say that this moves. I don't know. Let's say you strapped it on there, 39.14.75. And let's say the market moves 10 points against you. Remember, you funded your account with $2,000. The margin to put on is $40, so that's not that big of a deal. That means I've got $1,960 left in purchasing power in my account. But if this thing moves 10 points, and just hypothetically, okay, I don't want to go into the math, but let's say hypothetically that each point here was $50. then if we move 10 points, then that means my account, I still have the position on, and let's say it's through the middle of the day. If 1 point equals $50 and the market moves 10 points against me, well, maybe I shorted here. Now it's up here. And you can see, from this point here, this breakout here up to here, if you were, say, short this level, you thought, hey, that's a good short, and the market goes up against you, now you're down 26 points. So we're just going to hypothetically say that 1 point's $50. Obviously, it's more, but let's just to keep this nice and simple. And the market moves 10 points, boom, against you. You're now down $500. Remember, you have to maintain a certain equity value in your account. So now my account is, I'm minus the $40 for the performance bond, but I'm also down $500 in equity. So now, actually, my account is now down 540 out of that original 2,000. Now my equity in the account is $1,460. And remember, we said that AMP has a magic threshold that if you break that 1150 number, So let's say market moves a little bit further against you. And now 1150 is your magic number. You've got another $310 of wiggle room. So let's say the market moves, I don't know, another 50 points. So now the market is down to 20 points. Boom. All right. And don't kid yourself, that can easily happen. Now market's down 20 points against you. This number is now times 2. All right, just doubled. So now you are down 1,000 in equity, plus you got to have your performance bond of $40. You're now down 1,040, which means that your account equity now is not $1,460. It's now $940. $960. 2,000 minus the 1,040, you got 960 in purchasing power in your account, and your broker says, rant, 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 you are now under margin. And really, they wouldn't even let it get to this point. As soon as it gets to, and you can do the math, whatever the actual magic number is, I guess that would be what, $850. So as soon as this position went down, the amount to trigger that 850, you get your margin call. And if you can't pony up more dough to make sure that you stay above this 1150 number, they just liquidate the position. Boom, you're gone. So I know that was kind of messy, but you tell me whether that helps you understand margin a little bit better. And the difference between micros and minis is not really that big of a deal. It's just it's 1/10 the size of the contract. So everything is 1/10 the size. You don't want, trust me, you don't want a margin call on these things. You want a margin call on the DAX futures, $36,000. You just got wiped out. So, it's far better to get a margin call that you're underwater $1,000 and you don't have it. You lost it. Boom. Okay, game over. You're better to be playing in these guys until you know how to make money than go heading up into the big boys. Okay, this was from Michael. I see BT over there says, great explanation, BB. So I don't know whether, Michael, that helped you or not, but I sure hope it did. I blabbed away there for a couple hours. I'm not even quite sure what it is I talked to you guys about. I hope you guys got some value out of all that. We're having a lot of fun there, eh? Talking about the ETH. Let's see how we did. at the end of the day. And I guess I'll be on my way because I got to go get pretty for Liam. Look at that, eh? Do not sell the break of that trend line. That is a trap. That's got to be the theme of today's video. And after Chris, if you could piece that together and what I talked about, don't sell it. And then we saw the pop. I think you ought to show at the end of it. And this is what happened shortly thereafter. Good idea to learn from that. What do you think, Chris? Do you think we could do that? I mean, that's pretty cool, eh? All right, awesome. All right, everybody. I'm going to leave it at that. Hope you have yourself a nice summer day. Hopefully, you learned something. It was kind of fun trying to show you that really all of this stuff is all interconnected, and it doesn't really matter whether you're off a 1 minute or a weekly price chart. It's all the same. PMA for the win. Slow and steady wins a race. I suppose we're right in the middle of the school term. So hopefully everybody's getting good value out of their money spent. I know it's very difficult to just wait for the bottom to come in. One thing I will say for market-wise before we take off, love the work that Stuart has put in to build the dashboard out, to give us usable trade information. Tomorrow, of course, Monday is the day that we specifically earmarked to go through dashboard information, see if there's anything in particular we want to pay attention to. When we look at the breadth of the market, it's interesting how on a medium term, actually crypto is getting back sort of not overbought on the medium term. So we still got a ways to go up there. Overbought maybe in the short term. A little concerned that bonds are getting a bit overbought in the short term as well. And you can see, interestingly enough, I think that crypto is a weird kind of like leading indicator. It's actually been moving up, not really great, but a lot of the altcoins and stuff have been moving up recently. Dominance actually looks a little bit better. So I think on balance, this sort of message has been correct. And what I would just simply say is I think that crypto is an excellent leading indicator. So if we see crypto, it actually turned up about just a few weeks ago now. Seems we're not overbought yet, but gee, on the universe, but on the crypto 30, we already are. That's not good. I don't like that. So you can see how the rest of the risk market is being dragged up with it. How long lasting this is, I don't know. It's tough to say. We should have some interesting conversations in the daily brief tomorrow. Like I said, reviewing the whole market. Lots of markets that we're hunting buys in. You can see it. And actually, oh, isn't that interesting? We used to have crypto on this list. But nothing that's really either spat up a buy signal or has seen any follow through. Oh, interesting. So I guess the crypto top 30 took it down. So I can't show you crypto there, but what I would just simply say is, broader market seems to be trying to turn this corner. We had like Mr. Nancy go long there about 2 or 3 weeks ago, and I think maybe a bit early. But I'm feeling, though, that the market does want to pivot back to the upside here. We're getting awfully close. So we'll spend lots of time tomorrow and Tuesday and Wednesday going through what these potential bottoms look like. Keep the faith. Slow and steady wins the race. Interestingly enough, like on that Ethereum, I forced myself to come in and buy some on the tag of $1,000. So interesting how we were working our way up. Now I don't feel so smart, but just even overnight we're up at like $1,200-$1,300, and I'm like, damn, that's 30% return already. So I actually expect this thing to be up at $2,000-$3,000 by the end of the summer. We'll see how it goes. Slow and steady wins the race. PMA for the win. Go slowly. Don't take no wooden nickels. wish me luck with Liam's. Great to see all the good positive karma. I think he and I will have a great car ride today, so super stoked for that. And I guess we'll see everybody back on the site later on this evening. I'll pop into the lounge and say hi and do a little bit of review. And of course, we'll see everybody for the daily brief first thing in the morning when all the adults come back to work. All right, everybody, have yourselves a great day. All the best, and bye for now.